Let's welcome on board our experts and figure out what the strength of the market today is indicating. We've got Gurmeet Chadha joining in on the fundamentals, Naresh Mirani, Kunal Bothra on the charts. Kunal, didn't think it's going to be that strong, right? The weekly expiry, it's holding a solid almost 300 points up in the green. What are you making of the levels right now?
I think touch wood to the market rally in the last 4 days, but it's been a different texture altogether for the markets. Almost like a 1200 point plus recovery from 21,800 900 mark on the index towards 23,200 plus mark where we're trading right now. Absolutely strong, different texture of the markets almost on a daily basis. Today you're seeing different differentiated large cap names starting to participate. For example, names like Reliance Industries. Then you have larger cap names on the banking side which are start to look attractive. And then the IT stocks, few of the larger cap names, they've started to make a comeback for themselves. So I believe that that's a very interesting sign, because generally when you see large caps playing a relay race in a market rally, that generally indicates that the momentum shifts towards fresh large cap names, and the earlier ones which have moved up higher, they try to consolidate and then gradually move up higher. That's a typical sign of a trend. Now the interesting bit for the markets today is we've managed to break past about the 50 DMA as well as the 23,000 mark. So I think on the back of these two important technical points, I would look at 23,000 as a strong short-term base for the index, and keeping that as a closing base stop loss. Traders can hold on to their long positions.
Okay, so hold on to long positions. It's an optimistic call coming in on the Nifty 50. This entire week, we've only seen the green on Nifty. So looking good, at least for the benchmarks in today's trade. But on that note, Gurmeet, hi, good afternoon and welcome to the show. Just want to get your view on a sector that's beaten down today, right? And we were just talking about the wires and cables segment. What should an investor do if they're invested in this space right now, if they have some of these names like KEI or Havells or a Polycab in their portfolio? Do you believe that this is a move that's coming in on the back of just this news flow? It's just a one-time shock that's coming in, and in the near future there's room for everybody to win in this space? Or do you believe that these new entrants could be creating more of a havoc than the street is estimating at this point?
I think it's a bit of a parallel street is drawing what happened to Asian Paints when Birla came up with the Opus brand. But in paint, Asian Paint was holding more than 60% market share. This is a very fragmented industry, and if you take the market share in the organized segment, Polycab has upwards of 20%. But if you include the overall market, even their share would be 13-14%. Uh, Companies which and the margin wise also Polycab leads with almost 13% in cables and wires. So I think there's a bit of a concern there, and also because the valuations are stretched, you don't want to take chances in this market looking at what has happened to high valuation stock. So despite the fall, Polycab still trades at about 30-35 times forward. Uh, but my sense is there's a bit of a overreaction. Also, if you see earlier when Ultratech came, the stock corrected and we saw a bit of a recovery. Today again, we have another announcement. And it's, cable and wire business is very different from, using your existing network of cement, if I were to say that the distribution network is completely different for electricals. But let's see over a period of time. I think the industry itself is likely to grow with surging power demand, revival in housing and infra. Cable and wires have multiple plays. And by the time I think these guys would be operational, the market would have also grown by another 15-20,000 crores from currently about, let's say, a lakh crore. So I don't see much concern in the long run, but medium term, I think it's more sentiment and seeing what happened to Asian Paints. I think the markets are reacting.
Other than that, Gurmeet, afternoon firstly, I mean, why are all these conglomerates rushing to the wires and cable space? I mean, one would have thought that a large part of the unorganized to organized play is already behind us, with, many listed players already out there with very dominant market shares led by, I think, Polycab. And other than that, one thought that this is a relatively low margin business. So then what sense does it make for Ultratech and Adani both to get into the sector?
No, I think it's a bit of a backward integration for both. Ultratech obviously has back-end integration with metals. They want to use synergy in terms of the reach they have. Adani also, if you see, they've done a JV where this particular JV will do whole host of other things than just cable and wires alone. But Aisha, what I've seen over a period of time, if conglomerates, diversify too much, it's not necessarily leads to wealth creation. And sticking to core is what helps, is what reading has been over the long run. But as I said, coming to margin, I think it's a decent margin business. You look at margins with ROCE, you get like 12-13% margin business with a very good double-digit ROE. So from a asset turnover basis, from a capital allocation basis, if you are able to grab some share, may not be a bad call. But as I said, it's very different. It's just that it's not just just a simple cable and wire, which it has a lot of brand appeal. Polycab in particular has a very good B2C network other than B2B. So I think in B2B, and that is why probably KEI is reacting more because that relies more on B2B. Polycab also has now been able to build a very good brand from a B2C segment. Then you have FMEG also, which they are trying to scale up. But markets being markets, in bull markets we ignore bad news. In bear markets we ignore all the good news. So I think Polycab also got a 3,000 crore order recently from BSNL. I think for Bihar Circle. So I think the size of the market, the industry itself is likely to grow high, early double digit, and probably the larger ones, and that's probably people want to capitalize on.
Coming in on the entire wires and cable space. Naresh, hi, and welcome to the show as well. Let's talk about the entire Nifty IT space, because I remember yesterday this was the biggest sectoral loser. Today it's the top sectoral gainer. It's been a very good recovery coming in for the IT segment just in 2 sessions of trade. Help us understand what levels you're spotting for this one and what's the outlook on the charts, at least for Nifty IT.
So in the December-Jan period, which is where Nifty IT continued to outperform, that is over. It was sustaining well above the 200-day moving average, sustaining well, even made a new 52-week high back in December. Now that has turned, it has broken down. Going forward from this 36,000 odd levels, 38,500 to 39,500 would be a stiff resistance. So for now, it would become a market performer or rather underperformer going forward. So no more the leader IT, and closer to 39,500 would be a place one would actually look to go short at.
Well, holding up pretty okay. We're not just back at the 23,000 mark. We're building on quite nicely to that level on the weekly expiry day. Still clinging on to that 23,200 print for the Nifty futures. Not just the benchmark indexes, but the broader market is equally lively, if not more. Look at moves like Bharat Forge, for instance, a solid 5.25% move there. Max Healthcare, quite interestingly, has been moving for the last 2 trading sessions. Today as well, it's put on another 4.5% in trade. Hindustan Copper has been going very strong. And some of these realty plays also have been making sporadic moves. Today, you've got Phoenix, which is actually holding up, and I think yesterday it was Prestige, which actually looked good. That said, you are seeing buying on some of these names from their 52-week lows. Quite a few sectors other than IT, of course, have seen quite a meaningful recovery coming in. And yeah, the entire defense pack, especially with regards to the recent order wins, that's really come to the fore once again. Gurmeet, post the recent correction, would you be looking at any of the defense or the shipbuilding names?
Yeah, I mean, valuations did see a correction, although some pockets are still stressed. I think what we are seeing is a global order getting reset. I think look at what the German parliament did. I think it's been a record budget approved both in infra and defense spending. And with the new world order, probably you will see one area where everybody would shore up investments is defense, especially EU. And India probably stands an opportunity both in, obviously we have our own domestic, cycle playing out. The defense minister spoke about this year being a reform year and a landmark year for defense. And then you have the EU opportunity. So I think, so we have solar industries in our portfolio that has smartly recovered from 8,000 odd lows on back of order wins on Pinaka rocket. Then we have Zen Technology in the portfolio. It saw a correction almost 50% from the highs, although the stock is still expensive. But they are guiding that full year they should be able to meet the numbers. So I think next quarter numbers are important. And we are also looking at Bharat Electronics in the portfolio. So you have to be selective here because the order books are long, and there's also some risk in terms of either order getting delayed or not getting or even getting cancelled. So you have to keep that in mind and do not pay only basis the order book which the industry was paying till last year.
So take coming in on a couple of these defense names. Of course, we have news coming in for Bharat Forge also today. That stock is doing well. It's been selected by the government for some gun artillery, so that's looking good for the stock. That stock is also up by 5%. Kunal, how is Bharat Forge looking like on the charts to you? Because it's been a while since we've seen this kind of a move coming in on the stock.
Yeah, in fact, yesterday on the Chartbusters, I had taken Bharat Forge as a discussion point because my sense is that the stock was ending a major 7 to 8 month of a consistent downtrend, and that too with the classical pattern of lower highs and lower lows consistently, almost 7 or 8 times in the past 7-8 months of this price correction. Bharat Forge had managed to cling on to that resistance as well as support trend line. And yesterday was the first day when you've seen the stock break past about that 1120, 1130 mark as well as the resistance trend line. This I believe could be potentially a very strong up move for Bharat Forge. And generally we've seen that whenever stocks end their 7 to 7-8 month kind of a downtrending cycle, we look at least 2 to 3 months of a price rally or a recovery into these names and a retracement of almost 50%. So which means from 1800 levels thereabout, which was the top or the recent swing high or the major swing high for Bharat Forge in 2024, towards the point when the stock went sub 1000, I think we could be looking at 1350 to 1400 as a broad target for Bharat Forge, which means potentially even from current levels of 1090 thereabouts, we could be looking at a substantial 10 to 15% up move at least over the next 1 to 3 months.
Gurmeet, before we let you go, other than of course defense and the spaces we talked about, the wires and cables, where else are you seeing buying opportunity?
I said that's to me.
Yeah, Gurmeet, to you.
Yeah. So I think financials, as I mentioned earlier, continue to look good. I think we've seen a clear change of RBI stance, not from an official stance, but both in terms of liquidity, both in terms of interest rates, and in terms of we saw a lot of tightening both by RBI and SEBI. RBI in terms of loans, in terms of LCR guidelines. So I think the stance has changed now. They're looking at giving a more long roadway on a lot of regulatory guidelines. Then they've infused liquidity, which to me has been record liquidity infusion after a while. So initially the names get compressed a little bit, but over a period of time it will be the cost of funds do come off. The deposit growth is slightly coming back now. So I think banks look good. We like some good quality NBFCs also, especially in housing finance and gold finance space. We like consumer discretionary spend because the consumption basket itself is undergoing a change. So whether those are airline stocks, we have Interglobe in our portfolio, some of the hotel stocks, including Indian Hotels and Lemon Tree. We recently also, because we were holding ITC, got ITC Hotels. So I think that looks at 30,000 crore odd market cap, it looks reasonably valued. And then we are looking at selectively auto because the leadership is now getting established. So in two-wheelers, I think TVS is clearly leading now, both in exports, even in electric, iQube doing well, as well as the two-wheelers, both motorcycles and bikes. Then you have M&M clearly dominating on SUVs. Their market share is back at 23%. I think this was a bit of an overreaction on Tesla's entry to India because the price points on which both operate are very different. Tractor, they are gaining market share and farm equipments. And even in auto ancillaries, we are seeing ones who are dependent on Europe under pressure and ones which are more domestic, which are more content per play, I think doing well, which is likes of Uno Minda, etc. So I think there probably the leadership is getting differentiated. Hero also has had a lot of leadership exits in two-wheeler space. So selectively in auto, that also is technically a part of the consumption portfolio. And one last is the energy. I think I saw a beautiful article by Mr. Nandan Nilikani that energy is the next UPI. I think and that's one space I would closely watch because the country also needs a lot of power reforms other than just creating energy marketplaces.
Okay, Gurmeet, so bunch of positive calls on sectors as well as stocks coming in from Gurmeet. Thanks so much for that, Gurmeet. On that note, we'll let you go. But 30 minutes of trade left and time now to get some closing trade ideas. Kunal, what's your closing trade for the day?
So I'll go with a large cap name, Reliance Industries. Finally, the stock coming out of a breakout and potentially a consolidation breakout about the 1250 mark. So it looks like the stock should now be heading towards 1300 to 1350 range over the very near term. So a decent upside potential of another 5% swing for Reliance Industries.
Okay, buy call on Reliance from Kunal. Nuresh, what about you? What's your closing trade for the day?
So that would be about Nykaa. The stock has been sideways for the last 4 months and setting up for a breakout above the 170-75 mark, which has been a resistance. So risk reward trade here, preemptive buy. Once it sustains 172 odd levels, it should be a big breakout. So looking at it as a breakout move going forward towards 190, 200 also.